UBIT is the tax that hits a tax-exempt organization when it runs a business on the side. The IRS allows some money making, but it doesn't want a charity competing like a regular business without paying tax. On the EA exam, the key is spotting when income becomes unrelated business income and when a filing is triggered, even though the organization is still exempt overall. Use the three-part test. First, is it a trade or business, meaning it looks like selling goods or services for profit? Second, is it regularly carried on, frequency and continuity like a commercial business? Third, is it not substantially related to the exempt purpose? Miss any one part, and it's not UBIT. The exam loves 2 out of 3 traps. Now the big trigger, Form 990-T. If the organization has $1,000 or more of gross income from an unrelated business, it must file 990-T. Notice it's gross income, not net profit. That's a classic exam trick. Even if deductions wipe it out, the filing requirement can still exist once gross unrelated income hits the threshold. UBIT is taxed at a flat 21% rate, and estimated tax matters. If the organization expects its UBIT tax for the year to be $500 or more, it generally must make quarterly estimated payments. Another exam favorite, the return can be extended, but any tax due must be paid by the original due date to avoid interest and penalties. Let's apply the test to common scenarios. A sponsorship can be UBIT when the charity performs services, like promotional appearances or endorsements, because that looks like advertising income from a business deal. But a negotiated discount from a vendor is usually just a price reduction, not income at all, so it's not UBIT. Same exclusive provider vibe, totally different tax result. One more high-yield exception, volunteer-run activities. If substantially all the work is done by unpaid volunteers, the activity generally isn't treated as an unrelated trade or business for UBIT purposes. So a volunteer fire association running monthly paid admission dances can raise funds without UBIT because the labor is volunteer. The exam will tell you who does the work. Don't ignore it. Every exempt organization must have a blank. Your choices include a charitable purpose, an employer identification number, an annual information return, or an affirmation letter from the IRS. Think about what the IRS uses to identify the organization for filings and correspondence, even if it has no employees. Think about it. The correct answer is an employer identification number. Exempt organizations generally need an EIN for tax administration, banking, and IRS filings. A tempting wrong answer is an annual information return because many exempt orgs file Form 990, but not all do. Churches are a classic exception. The EIN requirement is the safer universal rule. The Northern Wing Sanctuary is a 501(c)(3) organization dedicated to saving wild birds, newly formed in 2023. What form must it file to request formal exemption from the IRS? The options include Form 990, Form 1024A, Form 1024, and Form 1024, and Form 1023. Think about which application matches 501(c)(3). Think about it. The correct answer is Form 1023. That's the application used to request recognition of exemption under IRC Section 501(c)(3). Form 990 is an annual information return, not the exemption application. And Forms 1024 and 1024A are used for other types of exempt organizations, not standard 501(c)(3) charities.